Joining me around the table here in New York, I'm pleased to say, Peter Tchir of Academy Securities, Frank Rybinski of Aegon Asset Management, and Michael O'Rourke of Jones Trading. Michael, let's begin with you. Your take from the banks that we've had so far.
You know, obviously the numbers, JP Morgan's numbers look good. I think we still have this issue of net interest margins is going to persist because obviously the Fed's in right now what seems like an easing environment. Obviously they indicated they don't really want to ease further, but it looks like they might have to. And then, of course, trading business, the investment bank business isn't looking that great. And then on top of that, the IPO business that was there looks like that's drying up. So even though the numbers might look okay today, in many cases, the outlook doesn't look great.
What do you think, Frank?
So we're largely a fixed income firm, so we're looking at it from the credit side. And from that perspective, this is pretty much what we've been calling. We've been constructive on bank credits overall because they have, and when I say banks, I should split. On the money center side is where we're constructive as opposed to regional side. Money centers have much more of a diversified book of business, so they're able to offset the NIMs, as we know, those are going to be pressured. They also have a much higher Tier 1 capital ratios. So from that side, we think what we're seeing is pretty consistent from a credit basis with what our view has been.
Peter Tchir?
Yeah, completely agree. From a credit standpoint, the banks are all doing great. I think this is all working well. I think it's interesting that the consumer is actually holding together pretty well. Given all this talk about recession, we're certainly not seeing that coming from the consumer. And if the consumer holds through, I think the U.S. can actually pull through the economic side.
It's interesting, on a morning like this morning, I think most people were looking forward to not talking about trade, Michael. But the bank sector, kind of strangely, has become the proxy for the trade story because it is so rate sensitive and rates have been driven almost exclusively by the trade story through much of this year. Michael, is that still the case for many of these names?
I think it is. When, it's funny, the IMF came out with those new forecasts, right? And when you think about U.S. GDP this year, there's been a deceleration throughout the year, right? Q1 was the strongest quarter. Q3 is probably going to be the weakest as of yet. So this trade story has weighed on the economy. It's weighed on the ISM prints. So although we've had good hard data throughout most of the year as far as jobs and stuff like that, we're seeing weakening out there, and a lot of that's being blamed on trade.
What's interesting, though, Michael, is that some of the names on the screen right now, Citigroup is up around about 30% through 2019 and some. JP Morgan up 20%. And some through 2019. When you ask people about the banks, just in terms of sentiment, they'll start pulling faces at you. But through 2019, this has kept up with the market, many of these big names, and some.
They have. The interesting thing is I'd say their multiples right now are probably 20 to 30% higher than they traditionally traded pre-crisis. And I think maybe there's a little boost in there because people think the environment's safer after post-crisis regulations. That might be misguided sentiment, but I'd say the valuations are a little lofty relative to history.
How much of it do you think is just buybacks and cost cuts through much of this year?
I mean, I think that helps a lot, right? But you don't grow through cutting costs, and that's where, when you think about investing for the future, you have to keep your eye on that.
Final word, Peter.
Yeah, I think the yield curve hasn't been as big as an impact on the bank earnings as many people thought. I think they're still good. I think we start seeing a steepening of the yield curve through Q4. I think banks are going to continue to do pretty well.